Hey everyone, welcome back to Corporate Decoder. Today we're diving into a quarterly report so thrilling it's basically watching paint dry with interest. Get ready for some financial deep diving. This report reveals how Selective Insurance Group performed in the first 3 months of 2025. We'll break down the key numbers so you know what's really going on. First, let's check out the table of contents. It's where the good stuff is listed. Scroll March 31, 2025, giving us a snapshot of their financial health at that point in time. Selective Insurance Group is a publicly traded company and their stock trades under the symbol SIII. They are also issuing depository shares traded as SIIP. Scroll Yes Numex. It's good to see the company confirming they've filed all the necessary reports and submitted their interactive data files electronically as required. Keeps them on the right side of the regulators. Scroll 67, 744, 14, 400 and 44, 440, 14 fraction seg. As of mid-April 2025, Selective had around 60.8 million shares of common stock outstanding. This number is important when calculating earnings per share. Alright, let's dive into the financials. Scroll March 31, 2025 nin fraction instead. Looking at the balance sheet, which is the statement of the company's assets, liabilities and equity, let's see some key numbers. Scroll 8605, 17.5 sun fraction 17.5. They have a lot of available for sale fixed income securities, which are at fair value, totaling around $8.6 billion. This is their biggest holding. Deferred tax assets clock in at roughly $130 and merchants they have some tax benefits they can use in the future to lower their tax bill. Scroll 6 are 1675 din fraction. Stick 1.855 new fraction $6 billion. This is how much they expect to pay out in claims. The company has $200 million in preferred stock. And finally, they have negative equity from treasury stock they bought back of roughly $607 million. Now let's turn to the income statement, which shows the company's profits over the quarter. Tours scroll to 58, 875D7 fraxis after deducting the cost of reinsurance. They earned a solid $121 million from their investments. This helps cushion the ups and downs of the insurance business. Unfortunately, the losses and less expenses, the money they paid in claims, totaled over $746 million. After all expenses, Selective Insurance is left with a net income of just under $110 million. That's the real profit. This translates to 1.77 earnings per share. Moving on to the statement of comprehensive income, which shows the company's other income like unrealized gains and losses from investments. Scroll 64,088 million fraction SIL. They saw a significant unrealized gains on securities at $64 million, so their investment book increased in value. But they also had some reclassifications of the gains with net actuarial loss. Overall, their comprehensive income is about $175 million for the quarter. The stockholders' equity statement shows the movement of money in and out of the owner's accounts. They're buying back their own stock, spending over $19 million, which is a pretty good use of their income since they are buying it at great valuations in general. They generated almost $284 million in cash from their core insurance business, which is a great increase. They have over $395 million from borrowings from new debt. Overall, their cash and restricted cash increased over $45 million for the quarter whole statements of cash flows Numet. Integral part of the whole financial report. Scroll the basis of presentation Unimic. It's noted that the report uses estimations and assumptions which are subject to change. Always a little wiggle room there. There are future changes coming in how they report income taxes. It will involve more disclosure, actu and scroll statements of cash flows in Nuex it. Here are some other boring notes I'm going to skip. Let's scroll to the nice figures and tables. I have a short attention span. Interesting corporate actions such as stock splits accounted for over $18 million. There was no cash purchase of property and equipment. Here is a total summary of their cash and equivalents. Quantitative disclosures about their available for sale portfolio. They have around $8.6 billion in available for sale fixed income securities. This is the roll forward schedule from the allowance of credit losses and reconciliation of their values. Quantitative information about unrealized losses is listed here. There's a lot of info, you can check them out as you want. I will focus on just the big numbers. Here's more analysis of the different security levels and more analysis of loss positions, good for the nerds that like to dive into them. Distributions from investments were over $3 million at key. Scroll Senior notes Numerix, the company has pledged some of their assets, which is a normal thing for financing. Disclosures related to fair value when they are not measured at fair value but disclosed. The next changes are in disclosures for income taxes. The industry is moving to improve transparency with these filings. Undistributed gains were around $5 million. The next section covers their debt. You can see amounts due here. Here they note that there is no certainty on investment of additional amounts. This provides them some safety from potential false claims. We are nearly at the end. We reach the section where they describe that during the 3 months ended March 31, 2025, no director or officer of the company adopted, modified, or terminated any contract, instruction, or written plan for the purchase or sale of the company's securities. That is a great thing. No insider trading here. And that's it. The rest is just legal information and signatures. So what's the story with Selective Insurance Group? They grew their revenue and kept a solid profit. The debt they have and the debt they've recently issued is probably not ideal. Overall, they seems like a fairly stable, if not super exciting company. If we look more broadly, we can see some hints of what they are doing. They are cutting production in unprofitable areas. They are focusing on profit in this report, which is a good thing in the long run. Even if it hurts short-term revenue numbers, their rating is fairly high and stable, although their portfolio is not that diverse. In conclusion, I'd say Selective Insurance is navigating a challenging market reasonably well. But for a retail investor to make good money, that's a trickier question. Thanks for watching. And if you enjoyed this decoding session, don't forget to like, comment, and subscribe. And if you have any filings you want me to dive into, drop them in the comments.